The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.
Good luck to GM Pharma, and before saying goodbye for today, I will use the rest of the time for some exclusive interviews to show you how one of the leading international investment bank, Renaissance Capital, and one of the leading think tanks, PMCG, evaluate the chances of Russia-Ukraine full-fledged war, the impact that Western sanctions might have on Russia, and what could be some of the spillover effects. I will start with Renaissance Capital, a leading emerging and frontier markets investment bank, providing access to over 50 markets across the globe, with operations in Africa, Central and Eastern Europe, North America and the Middle East. The Checkpoint talked to Sofya Donets. I've read your recent analysis on what's going on in between Ukraine and Russia and the whole world, basically. And you wrote this very interesting sentence that the war with Ukraine is something unthinkable for the absolute majority of Russians. They are not protesting against invasion just because they do not believe in it, we assume. Does this assumption still hold true, what we are seeing right now between the tensions between Ukraine and Russia? Because I'm conducting this interview with you, keeping in mind that everything might change in a second.
Yeah, sure.
And talking about economic sanctions might be like totally irrelevant at the moment that we are on air. Do you have such doubts as well? As Renaissance Capital, of course.
Still have a strong feeling and a strong belief that the military invasion was not what the Russia was targeting from the very start. So that's really important to understand that intrinsically, I would say that any military conflict between Russia and Ukraine would be strongly negative for both domestic and external sentiments, even if there will be no sanctions on the table. So it's a very negative scenario, but luckily we do not expect this to happen, and we do not assume that it was somehow targeted from the start of this escalation. And Russia has continuously reiterated that the invasion is not planned. And what we had as an update today, probably some relief. We already passed this checkpoint, which US and UK named as a alleged invasion time, and what we see that the situation is safe. So we keep our view that the de-escalation is the most likely scenario, though we do not expect it to be fast, and we do not rule out that we will still see additional sanctions from US imposed on Russia, though not tough but moderate.
What do these sanctions change in this equation? Because you also write that cost benefits for Russia are not supportive for the invasion scenario, and even if there are no sanctions, it still will be very tough on Russia's economy. But what do, for example, tough sanctions change in this equation?
Well, when we're talking about sanctions now, I would divide them into two large groups. One, which are not that likely, which are tough ones, and the other, which is not that scary. Yeah. So when we talk about moderate sanctions, which are not that scary, we're talking about such sanctions, for example, sanctions on individuals, sanctions on government entities, sanctions probably on some government financial corporations, but not on banks, not on corporates. Probably additional restrictions on the secondary trading of newly issued government debt, which was discussed before the escalation, like starting from the previous September and after the previous sanctions of 2021. These are moderate sanctions. This could have a very, very minor effect on the long run. And in the short run, I would argue that we could even see a relief from the market rather than stress. Yeah, so as soon as the market will have a news flow on sanctions, but we'll see that the sanctions are moderate, that could be a relief, like it worked in 2019 or 2020, 2021. Yeah, so that's pretty much the same. If we're talking about tough sanctions, I would say that again they're highly unlikely. Given that they are costly for both sides. Yeah, if we're talking about trade sanctions, then we will see some negative and undesired effects potentially on Europe, which are quite sensitive to fuel export from Russia. If we're talking about financial sanctions on corporates, well, probably it's not that much a pain for US to hurt those US investors who hold Russian assets. Yeah, this is not it's not such a large portfolio if we look at the overall US portfolios. Yeah, but in the end of the day, it's a very negative case study. So it could have like a domino effect on sentiments toward emerging markets and sentiments of U.S. investors towards the rule of the games, the rules of the game. Yeah, so that could be a negative case study. If we're talking about SWIFT, well, it's a very, very unlikely. So it's even not on the table according to EU communication. Yeah, but if we will fantasy and let's discuss like some apocalyptic scenarios, then okay, if we will if US and EU will switch off SWIFT for Russia, then how will the payments for export for Russian fuel will be made? It's a very tricky game.
Still, I want to discuss some of this, both important sanctions, as you call them, really tough sanctions, and milder sanctions as well. So what we see from the OFAC, it's like 13 major Russian companies, more than 275 of them subsidiaries and affiliates on the SSI list, right? So these include 5 large state-owned banks. This includes state-owned oil companies, state-owned defense and high-tech conglomerates, and also there will be some restrictions on the sanctions related to deep water, Arctic offshore or shale oil projects. Are these, what type of sanctions are these, and what would it cost Russia's economy?
It's really hard to talk about like precise quantitative effect of the sanctions given the lack of precedents, the relative precedents. But what we could mention, which is that Russia, if not sanction-proof, but at least is a very sanction-resilient, given its last 7 years experience. So Russia is well prepared. So in any case, first of all, the government is well equipped to react and to offer an assistance for both corporate sector, and the central bank is well equipped to provide assistance for the banking sector. The central bank has 630 billion reserves, which fully covers the total external debt of Russia, which is a big difference from, for example, the 2008 crisis. We also have a very balanced fiscal position with the government debt below 20% of GDP, with a fiscal surplus already this year and the previous year, with the fiscal savings in the National Wealth Fund close 11% of GDP. We also have like very moderate metrics of external debt, which is below 30% of GDP, and again, fully covered by external reserves. And probably another important thing is that the banking sector have a well-balanced position. Again, it's a huge difference with 2020, 28, 2029 experience. The banks were badly hurt by that experience, and now international assets of the banking sector are $100 billion above the total foreign liabilities. So the position is well balanced and well covered. Again, we also have a current account surplus, which was record high previous year. So again, all scenarios will for sure and primarily have very negative effect on sentiments. So we for sure will see an outflow from the financial markets. And if we're talking about like potential outflow from financial markets, we should mention like from the government bonds market, we could see an outflow of up to $40 billion. And from the equity market, it could be the same or more than that. But it's only a case for very, very negative and highly unlikely scenarios.
You also mentioned SWIFT, right? I read some of the estimates and the projections. For example, Carnegie Moscow Center has said that it would shrink Russia's GDP by 5% if it were disconnected from SWIFT.
Well, I think that's the big question when we're talking about SWIFT is not focused on the financial markets, so but primarily on the all kinds of payments which are made for external trade. Just because when the country is cut from SWIFT, we're talking about fast increase of the all transaction costs for all operations. If we're talking about whether Russia will survive this, yes, Russia will survive this. So again, we've mentioned the fixed reserves, we mentioned the well-equipped central bank, we mentioned well-equipped the banking sector. The Russia also have its domestic payment system and have some options to reroute its operations. But in the end of the day, like it worked after 2014, 2015, there is not zero probability of counter sanctions from Russian side. So if we're talking about like cutting off from SWIFT, so whether we should talk about like cutting off from Russian gas for Europe, so it's like a very tough sanctions with no zero probability for counter sanctions, and that's why I think that it's not like the only direct the effect of what we should be focused on, but we also should look at potential second round effects. Second round effects could be quite huge and could be shifted from financial side to the trade side, and the trade side is highly sensitive for Europe.
What makes you say that Russia will survive this tough section of being disconnected from SWIFT?
Well, again, we've already discussed that Russia has rebalanced its external and fiscal position quite well during last 7 years. So this means that the Russian financial system could function even in the regime of no availability of euro and US financing. Again, we also have, and we also should look at Asian markets, and I don't think that it will be equally unavailable even for the scenario of tough sanctions. And we also see that the domestic financial market has expanded quite a lot during the previous year. The dollarization of the Russian economy is really moderate, with the proportion of dollars and euros in deposits decreased below 30%, and with quite increased domestic bid for all kinds of Russian assets, with the decreasing share of non-residents both on equity market and government bond market. So it is again, nobody wants the Russia to be at least from my side, like a Russian-based investor, nobody wants to live in a country which is disconnected from international financial market in this globalized reality. So probably we all will have to look for another job if we will have these tough sanctions. But at the same time, if we pose the question is whether Russia could survive this in a strategical or systemically important point of view, then the answer will be yes. And I think that the good question is whether we should talk about whether these kinds of sanctions will work. And my answer will be that it depends on how you will pose the question. Work for what? If we're talking about that sanctions should work to harm someone's economy, then yes, it will harm the economy. If sanctions should work to change the country behavior, then for sure it won't. So, and in this sense, it will be like a kind of pointless sanctions, so which will not drive the change of the behavior of the Russian authorities.
Another big topic is the Nord Stream. For example, stopping this project, how do you see the perspective there?
Well, I think it's a very important starting point is that Nord Stream 2 is not used and not crucial for current amounts and volumes of Russian export of gas. So one should understand that the Russian gas contracts, long-term gas contracts, are not sensitive to Nord Stream 2 at this point. So the Nord Stream 2 was prepared as an alternative, but not as a crucial thing without which we could see a decrease of Russian export. Yeah. So it's not the thing that it's not like cutting a part of Russian export. It's like cutting a perspective increase of Russian export or perspective rerouting of Russian export. So it's about the potential. It's not about current export volumes. So in this sense, the effect of the cutting of not approving of the end of the Nord Stream 2 project will have close to zero effect on current volumes and current flows of Russian gas export. Yeah, so that's a very important starting point to understand. For sure, it will be like a kind of a pity to have all these costs which were distributed toward the construction of Nord Stream 2 sank. Yeah, so the sunk costs of this will be quite sensitive. But in the end of the day, these costs of Nord Stream 2 were already financed, and they were already there, and they were already well chewed and swallowed, let's say, by the Gazprom balance. Yeah, so that's not a question of broken liabilities or defaulting or having a need to cut the volumes of exports. It's only about the potential. It's only about the will of Russia to redistribute the gas export, which could be cut by the if the Nord Stream 2 is not launched and not certified. So that's not about the current volumes.
Yeah, but considering the fact that economy for Russia is still politics, if you look at Georgia and Ukraine and East Europe and that part of the then this is still a big blow because of that diversification or whatever Russia calls why it needs Nord Stream 2. It's not about expanding or increasing its exports, but it's also cutting off some countries and not giving them the transit flow, right? So that so can we say that at this point all these economic sanctions and talking about the economic sanctions there is more has more to do with politics rather than economics?
Sure. It's a very good point. again, if we're talking about Nord Stream, again, it's totally about the politics, not the economics, at least at this point. If we're talking about like financial markets, it's also about politics. And again, in this sense, there could be like intermediate scenarios. Not necessarily we will have like tough sanctions, but still we could have scenarios with moderate sanctions and a negative dynamics of sentiments toward Russia, or probably the very slow improvement of sentiments towards Russia. So the kind of a stagnation. So that's a, again, it's a whole book of scenarios.
So when we mentioned some of the companies that are being sanctioned, for example, we have VTB in Georgia, and VTB Georgia is also on the list of sanctions, and more companies are present in Georgia, right? Internal, RAO is present, Rosneft, Gazprom Export, even Lukoil, which Lukoil Georgia is not on the list.
Again, I would highlight here that if we're talking about moderate sanction, then we do not expect any corporate sanction to take place, or even banking sector sanctions for tradable and for market banks. So that's in this sense, we will also we could only see spillovers in terms of sentiments. And in terms of sentiments, what we saw during previous year, that for example, all the CIS region, CIS plus, let's say, region, was somewhat sensitive to the situation in Russia or Russia and Ukraine. But there were some more correlated, let's say, markets and less correlated markets with Russia. And I think it's a good news for Georgia that Georgia was among those who is relatively low correlated with Russia. I think that in terms of moderate sanctions, and probably tougher version of sanctions, the effect will primarily spread via trade balances and via dynamics of currencies. And again, if we look at the correlation between currencies of the region, Georgian lari have one of the lowest correlations. Of course, there could be a hit on sentiments, a hit on trade or services flows. Yeah. But in the end of the day, it could only be too sensitive for the region if we're talking about the toughest version of sanctions, with again a very low probability scenarios.
Let us sum up our conversation. And what is your main message at this point to the investors that are looking at this whole situation, and there is still high uncertainty of what will actually happen?
I think that's my main message from the current standpoint will be that we are not as optimistic to expect a very fast de-escalation, but we still expect de-escalation to take place. And we still see the probability of military invasion scenarios are very low and could only be a result of huge policy mistakes from all sides, which are again, unlikely for us. We still have quite an upside for any kind of de-escalation scenario. And if we're talking about currencies, that could be from 5 to 10% upside. If we're talking about equity markets, it could be above 10 or even above 20% upside. So despite that, the global situation and global de-risking pose quite a challenge for the CIS region for this year, and for probably the whole emerging markets space for this year, is still probably a nice thing to have, is that the valuation on our market is not that overheated. So we still have a chance to enjoy an upside.
The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.